Look at the stock of Signet Jewelers go. This morning, the parent of Kay Jewelers, Jared, and Zales reported a better than expected quarter, and its beaten down stock ended up surging more than 11%. Of course, these numbers weren't great in absolute terms. Signet same-store sales were actually down more than 9% year over year, although that's what Wall Street was looking for. Their guidance for the current quarter was a tad light, but there was enough good news to exceed Wall Street's very low expectations. Do not take it from me, though. Earlier today, we got a chance to sit down with Gina Drosos, the CEO of Signet Jewelers. Take a look. Ms. Drosos, welcome back to Mad Money.
Thanks, Jim. Great to be here.
Gina, another really spectacular quarter, especially in light of the fact of two things. One, that the consumer seems to be pulling back with other retailers. But two, you have a particular macro wave of engagements that turned out to be a headwind. I think our viewers would love to know more.
Sure. So, we operate in part of our jewelry category is the bridal segment, and it has two really distinct parts, engagements and weddings. It turns out that couples usually get engaged about 3 years after they start dating. And so we're seeing actually right now a decline in engagements because 3 years ago, we were just coming into COVID and people were quarantining. There weren't as many in-person events. So last year in calendar 2022, we saw a low double-digit decline in engagements. We'll see the same thing in calendar year 23, but by 24, it starts to go up again, and by 25, we'll be back to normalized levels.
Well, I think what's remarkable is your mosaic of business, including by the fact that you're closing underperforming stores, putting more money toward the good ones, has made it so I'm starting to understand that Signet has an aspirational wealth aspect to it that many people did not know about or that you've created since you got there.
Yes, it's very important. One of our goals is to grow market share. We've now proven that we can do that in a strong category environment or, like we saw last year, a down category environment. That's because our financial health is such that we continue to invest sustainably in our competitive advantages while we also give strong returns to shareholders. But part of those investments has gone to creating a broad and differentiated banner portfolio. At the top end, we have Blue Nile, Diamonds Direct, Jared, and James Allen. Those are players that we would say are in the accessible luxury part of the category, typically price points above $1,000. Average engagement rings up in the $3,000 to $5,000 range. And then we also have Kay, Zales in the mid-market. We have Banter down in the value segment. So we're really casting our net broadly, serving all consumers who want to, join our mission of helping them celebrate life and express love.
Well, because you don't have a lot of what we call in the business comps, comparable situations, I don't think people can understand. So many of the retailers I follow are beginning a stretched balance sheet. You're quite the opposite.
No, this is really a great story of Signet, Jim. We have very strong financial health. Our liquidity as a company is now more than 3 times higher than it was when we started our transformation. Over $2.6 billion of cash on the balance sheet. We've cut our leverage ratio in half from 4 times to 2 times, which is very healthy, by paying down $500 million of debt. And during that same time, we've returned $1.4 billion to shareholders in share buybacks and dividends. We bought 2 companies in all cash deals, almost $900 million, and we've invested $750 million in CapEx to really improve our store formats, our digital, our connected commerce and digital environment is best in class in jewelry, and our technology and data.
Well, I'm glad you talked about technology and data because everything at Signet used to be before you got there one-off. Now you have loyalty customers who look like they keep coming back and buying and buying.
That's been a great launch for us. About a year ago, we launched a loyalty program on Jared. We expanded it a little over 6 months ago to Kay and Zales. We already have over 2 million members. We expect we'll have 4 million by the end of the year. This is a wonderful way that we stay in touch with our customers. We build relationships with them, and then we create lifetime value by helping them with birthdays, with anniversaries, all kinds of services to repair their jewelry. It's really been a strong program.
And then the last thing in terms of dividing what the old Signet was versus the new Signet, the old Signet really was, in some ways, a kind of a faulty bank, I would say. You decided to scrap that immediately. You now have a plan to make it so that people can borrow money in order to be able to pay things, but that borrowing does not come to your balance sheet. It comes to outside.
That's right, Jim. We have a very strong portfolio of financial services offerings. We have a private label credit card. We have leasing agreements that customers can choose. We have a split pay option where you can divide your payments for an item over a number of months. That's a particular, financial service that's interesting to Gen Z customers. And all of these do not have an impact on our balance sheet. We're completely clean in that sense. But I would say probably the biggest transformation of Signet is our culture. We have a culture of innovation and agility now, building leaders at every level, diversity, equity, and inclusion as part of our strategy, and our team has really made a big difference. Well,
we have to wrap things up, but I want you to come to New York, and we'll spend a couple segments talking about what you've done for a company that a lot of people have written off and is now probably the number one in the category, but also you're the number one in the category of retail. What a turnaround. That's Gina, Drosos, CEO of Signet Jewelers. You told me when you came in this could happen. Frankly, I was doubtful. Now I'm an all-in believer in what you've done. Thank you for coming on Mad Money.
Thank you so much.
Mad Money's back in. Right.
Coming up, what's in your mind, Cramerica? Give us a call. The lightning round is storming the NYSE. Next.